Hello, and thank you for joining us today. We're going to be talking about the advantages of Checkbook IRA. My name is Dan Cordoba, and I am the Principal of Asset Exchange Strategies. I've authored about 4 books now, and most of them have been related to the IRA LLC and or the 401k. And we also have a very good rating with the BBB. We've had an A+ since 2004, and we haven't had one complaint since then. Tell you a little bit about the media coverage that we've received so far. ABC World News, Wall Street Journal, Forbes, Kiplinger's, Royalty Times, and scores of other publications have written about the IRA LLC and featured our company and or myself and or our clients in the documents. Well, let's go into what kind of retirement plans we can use for a self-directed IRA. First of all, the 2 that most people know about is the traditional IRA. Generally, those are funded with pre-tax dollars. And then when you take a distribution, those dollars are taxed. And then there's the Roth IRA. The Roth IRA, you pay taxes up front, you grow tax deferred, and then when you take your distribution, those distributions are tax-free. The only difference between the 2 of these is there's an income restriction of who can participate with a Roth IRA, and how the money comes out at the end, whether it is taxable or free, tax-free money. Let's take a few examples of small employer-sponsored plans. A SEP IRA is a pre-tax contribution, generally pretty high contributions, and it also is taxed on distribution, just like a traditional IRA. A simple IRA acts very much like a 401k, except it's an IRA. Your employer places at least 3% of your income into the plan, and then you're allowed to participate in the plan as well. And both of these, the SEP IRA and the simple IRA, are inherently self-directed. That means that you can take those accounts that you have in there at any time, with one exception, at any time, and be able to roll it over and buy real estate or any other non-traditional asset. Now, the simple IRA, there is one small rule we have to be careful of. The simple IRA had to be in existence for 2 years before you can roll it out into a self-directed IRA. Also, 401k solos, those are easy to administrate, qualified plans. Generally, these are mom-and-pop companies, and or where there's a partner that's greater than 5%. So, for example, you may have 5 partners in the company and everybody has a 20% share in the company. Well, that would be eligible for a 401k solo. And then the large companies, which almost everybody has that's probably listened to this, has what is called the profit-sharing plan. Now, we call them 401k plans, but they're almost always a profit-sharing plan. And some of these plans have a Roth 401k inside of those. These may be eligible to roll out into an IRA. You'll need to talk with your advisor to determine if you can do that or not. Well, what's the difference between a traditional IRA and a self-directed IRA? Well, traditional IRAs are generally limited to stock market investments. And as you know, you have very little control, the ups and downs of that stock market. And all sorts of things influence that. For example, mergers and acquisitions, interest rates, wars, Fed chiefs, presidential campaigns. There's just innumerable things that affect your retirement. And so wouldn't you like to have a little bit of stability in that? We'd like to show you how. Well, you can you self-direct your IRA with Charlie Schwab? Well, some people believe that they have a self-directed IRA, but in reality, their current plan with whoever the custodian in only allows for securities within a small inventory. Now, some companies like Charlie Schwab and or Fidelity, for example, they have a very large inventory, but it's all securities. It's not real estate. It's not gold. It's not precious metals. It's not paper. It's not notes. It's not tax liens. It's not any of these non-traditional assets. So wouldn't you rather have an IRA that you can invest not only in securities, but also into non-traditional assets? It all boils down to you have some limitations with the usual suspects. Well, what we would like to talk about today is a self-directed IRA LLC. This is a product that offers you checkbook control, litigation protection of the assets beyond the state protection, and it gives you the ability to invest without getting permission. And it also has lower custodial fees. And the advantage to this is, with the custodial fees, is that you are paying only once a year for these custodial fees. Every time there's a transaction in a mutual fund, every time that there's something that occurs in that mutual fund, you end up taking a hit for it. All that goes away. There's no middleman in Wall Street. There's no taxes to be paid. All of the profit that comes back is pure profit back into your IRA. So what does it take to create one of these things? Well, first of all, you have to have advisors with attorneys that specialize in these kind of accounts. Understand how to deal with custodians, because custodians are not necessarily easy people to deal with. They have their own little rules, and they kind of assume that you know these things, or they tell you to go back and talk to your CPA, and your CPA is not going to know all the rules. So it's better to work with an advisor who understands these things. You want to deal with an advisor who's dealt with the IRS on issues frequently. In other words, we fixed problems for people. Understand real estate transactions. Very important. The real estate transaction is completely different than securities. And so you want to make sure that you have the proper structure and you have, what's more importantly, an exit strategy. Bottom line is, these guys are hard to find. There aren't a whole lot of companies that do this. So let's take a look at the IRS Code and other references to this. 4975, that's IRC or IRS Code, defines the prohibition transactions between prohibited parties and what a bad transaction is. So basically, a prohibited party is you, your spouse, your parents, their spouse, your kids, their spouse. All right, those are prohibited parties. Your brother, your sister, your aunt, your uncle, your cousins are not prohibited parties. So we can work with all of those people. We can work with your spouse, your kids, and their spouses, but they have to be handled in a very specific manner. All right, well, let's take a look at what made this possible. A lot of times when people are working with products and or items that the Congress has allowed you to use, such as an IRA, there's some experimentation that goes on because the laws are kind of open-ended. They're not very specific as to how you can use something or how you cannot. In this case, Swanson was the first one to use a similar product such as this. And there was a lawsuit that occurred because the IRS agents thought it was illegal. As it turns out, it wasn't illegal after the courts had ruled it as being a legitimate transaction. And then there's a IRS memo, FSA 1128 of 2001, and it basically said, leave these structures alone. And then we can also go back to the DOL and we could look at private letter rulings that were offered supporting these structures as well. Well, can we take your money from other investors and put it into an IRA LLC? And the answer is yes. And the first member may or may not be an IRA, but in this case we're going to say that the first member is an IRA. And the second one may or may not be, but it could be you. So let's say that you're the second member of the IRA LLC. And the third member could be your wife, could be your mom, dad, one of your sons, daughters, doesn't matter. It could be anybody that's in there. The only rule that we really have to be careful of is that once you have placed in your personal funds or any disqualified party has placed in their personal funds, then they can no longer place any funds into the IRA LLC. But the IRA can continue to place money into the IRA LLC. So what happens with the money? Well, first of all, we have the IRA LLC that goes out and makes a transaction. We have contributions of cash from one member, and then we have contributions of cash from another member. And once the IRA LLC has gone out, made its transaction, and then the money comes back, for example, you sold the property, or you have rent, that comes back in distribution to the individuals. So let's take a look at how that works. First, money is moved from the current custodian. And again, we'll pick on Charlie Schwab and Fidelity. Those monies are moved, and we established a new custodian with a self-directed IRA that allows for non-traditional assets. The second step is that those funds are moved from there into a checking account of a bank of your choice. We don't care. It could be Bank of America, it could be Chase, it could be Wells Fargo, it could be a credit union. It doesn't really matter to us. Now, once that happens, then the IRA LLC will purchase the property with you as the manager. All the rent, all the appreciation, all the expenses, all run through the IRA LLC bank account. So you're in complete control at all times as to what happens with the funds in the IRA. So why isn't your money making any money? Or why isn't, your money making any money? That makes sense. Inflation threats, terrible rate of returns, no structure for tax advantages and asset protection. Let's take a look at this. The government's telling us that our inflation rate is, I don't know, maybe less than 0.5%. But have you gone to the grocery store lately? Have you been to the gas pump lately? It's a lot more than just 0.5%. So you take out those two items, the produce and the grocery store items, and then your gas pump, and you put everything else in place. Well, maybe everything else didn't cost as much, but certainly those items cost a lot. And so those inflation threats continue to eat away at your retirement possibilities. Terrible rate of return. If you had $100,000 in 2000, more than likely, for the average IRA holder today, they have $100,000. So they're treading water. As we have heart attacks, palpitations over losses in our IRAs, maybe we don't even look at our statements because our rate of returns have been so disappointing over these last 11 years. How about no structuring for tax advantages or asset protection? That often happens because we're relying on people that work for securities companies. No dividends are paid regularly. Very few companies are paying dividends now. At least if you have rental, the rent is like a dividend. You pay for an asset just like you buy a stock, and if that stock comes back every quarter, every month, or every year and says, here's your dividend, that's what rent would be like. It's like having a dividend being paid back to you. Maybe we're doing it based on luck. Well, it doesn't work very well. Some people can be very lucky, but I tend to not work very well that way. And I don't think very many other people do either. How about too much work? Yeah, you don't look at your statement because you already have a day job. You're busy. You have a family. You have a life. And so too much work. Let's take something that you can have already managed, get dividends, have some appreciation coming back to you, and you can start to see a growth in your IRA again. Sound good? Well, do you want to know more? Contact us. We'll give you the complete structure on how this can be done for you, how you can take your IRA and place real estate, tax liens, any asset that you want to put into it with the restriction to just a few assets. Our phone number here is 866-683-5228, 866-683-5228, or you can email us at sales@myrealestateira.com, sales@myrealestateira.com, or you can come visit our website, which is www.myrealestateira.com. Thank you very much for joining us today.